Welcome, everyone, to a Dose of Wisdom Real Estate podcast. I am your host, David Stein, and today we have the privilege of having on our show Isaac Weinberger. Isaac is a cost segregation specialist with Madison SPECS. To date, he has helped clients offset north of $200 million in tax liabilities since joining Madison SPECS. Isaac, thank you again for coming on the show.
Absolutely. Thank you, David. All I can say is that it's a real honor to be here. One of the premier hard money lenders in the industry, somebody who's so well versed in the real estate industry, and I'm excited. Thank you.
Yeah, likewise. Thank you for those words of praise, and your reputation precedes you as well. Okay, so my first question for you is, what's the backstory to how you came to be involved in cost segregation?
Yeah, it's actually a pretty funny story because I never even knew what cost segregation was. And if I was going to get involved in real estate, I thought it was going to be either mortgage brokerage or property brokerage or syndicating deals myself, possibly. What happened was I was managing one of the high-end retail stores over here in Central Jersey.
Right.
And long story short, I decided, even though I was getting paid pretty nicely, I decided that I wanted to maneuver somehow into the real estate world. And I started speaking to many folks. And one of the people that I spoke to was an uncle of mine who actually runs one of the divisions in Madison. He's pretty high up
Mhm.
here. He's the COO of one of the companies. It's called DocBro. And I went to speak to him. And he told me, he's like, Isaac, I just want to let you know that you're selling yourself short if you don't do sales. So sales is something that you're cut out for. And I think that you would be phenomenal in it. You got to do it. So I said, very nice. We'll do sales. What should I do in sales? Um, which path should I go down? Should I do brokerage? Should I syndicate? And obviously, the sale part of that is selling it to investors. So he told me, he's like, hey, why don't you meet with my buddy, who's my manager right now, Ike Marvette? He had no plan of me working in Madison. He's like, speak to him. He's a great sales guy. He's one of the sales managers. Let him direct you. I spoke with him, and we were talking about residential mortgages, commercial mortgages, syndicating deals, and all of a sudden a light clicked in his head, and he's like, "Hey, uh, I like the way you sound. I like your persistence. I like your innovative type of personality. And I
Right.
just finished creating a team, a COSAC team, and I'm thinking that maybe it would be smart for you to join us." And he's like, "Let me get back to you." So I started speaking to many people in the real estate world about COSAG, and I was like, "Hey, is this something that I should pursue?" And many people told me that it's a great avenue to pursue, and the rest is history.
Okay, it's a great story, and you're fortunate to found something that plays to your strengths. Um, okay, so could you explain for the common layperson how cost segregation works and who would benefit from it?
Absolutely. And this is so important because many people know about cost seg, but there's many misconceptions. So hopefully we'll be able to knock them off the chart today and make things clear. So in pretty simple terms, cost segregation is depreciation on steroids. Now, what's
Right.
depreciation? Depreciation is every time you buy an investment property, it doesn't matter which asset class. And we'll talk later about, I think, what we discussed. We'll talk later about different asset classes, which ones will get more. But the idea is every asset class is entitled to depreciation. You buy a $1 million multifamily property, you will get approximately $30,000 as a tax deduction every single year for 27 and a half years. Now, you may ask, hey, the reason why I'm in real estate is because properties appreciate, they go up in value. Why are you giving me depreciation as if they're going down in value? That's one of the benefits of real estate, that we benefit from properties appreciating, but we also benefit that the IRS and Congress, obviously the ones that implemented the laws, consider our property going down in value. That's regular depreciation, which has been going on for decades. Cost segregation, like I said, is just depreciation on steroids. Instead of taking a little bit every year, you get to take a huge chunk in year one And obviously, the benefit of that is to offset your tax liabilities and use that excess cash to reinvest in more real estate. I always say, and I'll finish with this, a dollar today is worth more than a dollar tomorrow. So if I can take a
100%.
larger chunk today, let me do it.
Right. Yep. That's definitely true. Do you have any interesting stories of divine providence or Ashkacha Pratis that you experienced in your profession that you wish to share with the audience?
Absolutely. So I'll always say this, that obviously Hashem wants us to do our part and to work. He's not going to give us something if we just sit back and take naps the whole day. But we gotta put pen to paper, and we gotta make phone calls, and we gotta go to conferences. But at the
Right.
same time, it's just incredible how he'll link one guy to another, and this could come out of nowhere. And the story that comes to mind for me is someone that I met at a conference, and I wasn't planning on talking to him for more than 2 minutes. He wasn't really involved in real estate. He was getting a little bit involved. And long story short, he knew of a guy, um, a huge guy that somehow, some way did not hear of cost segregation. It was a friend of his.
Right.
And long story short, this guy became one of my biggest clients. I wasn't even supposed to go to that conference. On the way to the conference, I told my wife, I was like, I don't even know why I'm going here. I think it's going to be a waste of time. And when I was even talking to him, I thought nothing would ever even come from it. He connected me with a guy that's one of my biggest clients today, who's connected me with other big real estate investors. So it's just, you
Right.
never know where it's going to come from. And I'm forever grateful for that story. It's
Okay.
unbelievable.
That is great. Do you have any interesting success stories that you've had helping clients with cost segregation that you wish to share?
Absolutely, absolutely. So obviously, every single client that I help um, and provides me the opportunity to help them with their cost segregation is a success story in and of itself, because
Right.
obviously the idea over here is to offset their tax liability. And if they thought they were going to be paying $200,000 to the IRS, and I could get them basically paying zero, or even have a negative K1 and let it roll over to
Right.
next year, that's a success in and of itself. But something that does come to mind is I had a guy reached out to me, and he said to me, "Hey, Isaac, I just heard about this whole cost set thing. I found you on LinkedIn. You have a nice presence there. I already filed, this was in 2022. I already filed for 2021. Is there any way to amend my tax bill? I paid a crazy amount in taxes, and I spoke to a few different firms, and they didn't want to help me with it for some reason. I don't know why, because you're able to amend a previous year's tax return."
Right.
And he's like, "This whole thing doesn't make sense to me. It's too good to be true. Let me see what you could do. Show me what you can do." I came back to him, and we got him a $400,000 deduction, which resulted in close to $175,000 extra in his account. And
Wow.
he was so floored. And his accountant, who wasn't familiar with cost segregation, he was like a little bit familiar with Section 179, but he wasn't so familiar, was floored. And I ended up giving a webinar to his whole crowd, his whole crew of guys, as a result of that, because he thought like I was just like Mr. Superman. I was like, it's not me. These are the codes, and thank God I work for an amazing company. So that's a success story that really hits home. That he already
Right.
had filed for 2021, and we went back and we amended it. He was just super excited, and he still calls me once in a while. I was like, we became like friends. He's like, "Hey, Isaac, what's going on? I'm raising capital for this deal. I'm doing this. I'm doing that. Let me connect you with that guy." So it's just
Right.
unbelievable, unbelievable feeling.
Right. Well, he was very fortunate to have found you. So, and
Yeah.
things worked out. Can you shine some light for the audience on what a real estate investor can expect in cost segregation benefits in various asset classes?
Sure, sure. It's such an important thing to know, because many people these days, obviously, you don't go into a deal specifically for depreciation, but that's a very big talking point. If you look at OMs and deal decks, many times they'll talk about how much depreciation you could expect per dollar invested. So
Right.
I'll go through the various asset classes of what you can expect, and obviously, it varies. It's not a set in stone number, but it gives you an idea. I'll start from the lowest and I'll go to the highest.
Right.
The lowest asset class in terms of depreciation benefits year one is self-storage. Now it's pretty self-explanatory, self-storage and industrial, because they're essentially hollow inside, because they want us to store our stuff there. So there's not really anything there. You got walls, sometimes you got HVAC, sometimes you have certain types of flooring that can be beneficial, but generally they're hollow inside. So you'll get anywhere from 8 to 12% of the purchase price in year one. Obviously, now that things phase down, will be a drop less, but around 8 to 12%. Now I got a self-storage facility 30% last year, and that's because he had a huge parking lot, which adds a lot, and he had special electrical and special flooring and special refrigerators there, but generally 8 to 12%. The next asset
Right.
class I would talk about is probably medical office, retail. That will get anywhere from 10 to 20%. It also really depends. Many times the stores are hollow. They just have those hanging racks when you come in. Again, it's really dependent on how big the parking lot is and a lot of different various items that you may have, but 10 to 20% of the purchase price.
Right.
The next asset class I would say is single family. Single family is generally anywhere from 15 to 30%. If you have a city style single family in Manhattan, you're not going to have any parking lot, any SR, any driveway, any front lawn. So you're going to get less, as opposed to if you have a beautiful mansion on an acre property with a basketball court and tennis court, you will get much higher. So that could vary from 15 to 30% of the purchase price. Then we'll go to our favorite asset class, multifamily. Multifamily is very similar to single family. It really depends. Is it a city style multifamily or in the Bronx, or is it a huge garden style multifamily with tennis courts in Texas? So it'll also range from anywhere from 15 to 17 to 30%, 32% of the purchase price. Now, the reason why I get so excited to talk about what you can expect is because there's a few asset classes that people are very unaware of. And those are as follows. Now, everybody knows about mobile home parks, but mobile home parks, you could expect anywhere from 50 to 80% of the purchase price.
Wow,
Now,
that's
it really
great.
depends. Mobile home parks, if they're park-owned homes, so you own the actual homes, then you will get that amazingly high write-off. But if, let's say, the actual renters, they own the homes, all you own is the land and the electrical poles, you're not going to get too much. The asset classes that many people don't know about. By the way, one more thing I forgot, hotels. Hotels get tremendous write-offs, anywhere from 20 to 40%. It depends on the FF&E. FF&E is the furniture that goes into it. That's a huge
Right.
component of hotels. The two asset classes that people are very unaware of are gas stations and car washes that I love to talk about. Gas stations and car washes are in its own world. They can get close to 100%. Now, I will put out there, you do not need to do a cost segregation in order to obtain the huge write-up for car washes and gas stations, but by doing a cost segregation study, you will benefit in a couple different ways in terms of state tax, in terms of different audit protection components. But gas stations and car washes, I've done a few in the past year or two over here at Madison, and we're talking about 95% of the purchase price. You purchase a car wash for $10 million, you're looking at $9 million of depreciation. It's phenomenal. It's crazy. So long story short, depreciation benefits are not just a icing on top. Depreciation benefits can actually change the whole landscape of a deal.
Okay. Wow, that was very informative. I learned a lot. So my final question to you is, what has been your personal experience with investing in real estate, and what have been some takeaway lessons that you have for the audience from your experience?
Absolutely. So you see a smile on my face because it's a bittersweet moment for me to reminisce about my first experience investing. My first experience was I didn't have a lot of money. We saved up. My wife and I saved up $20,000 to invest, and I gave it to somebody. I gave it to somebody I trusted, and I learned around 2 years later. It was a very complicated situation that it was gone. I don't think on the outset it was a Ponzi scheme. I think it was legit in the beginning, but when things went south, it just instead of him coming up and telling everybody, it just went deeper and deeper. And there's a lot of lessons I learned from it. And then we'll get into my successful one, but there's a lot of
Yeah.
lessons I learned from it. I would say it's actually a $20,000 well spent.
Yeah.
I wouldn't do it again, and I wish it was only $10,000 well spent as opposed to 20,000. But it really hit home how when it comes to business, it's hard to trust anybody. You have to deal with somebody that has a track record. For example, the audience watching this, I know David. I'm not just a guest on this podcast. I've met David multiple times. He is a
Right.
premier hard money lender that has a track record of many, many, many successful years and deals that he's done. So a track record, honesty, how people talk about them. Are they responsive? Are they straight up? You have to corner them for the information that you want, or do they provide it by themselves? It really, really taught me a lot. And then when I went into my second deal, that was a catalyst for me really dissecting it and doing it right. And obviously, as a passive investor, it provides many benefits. There's passive income. You get to learn
Right.
a little bit tricks of the trade, not too much, but people that are interested, you get to learn about different things. And many, I'm not a professional underwriter, but by investing and doing cost seg and doing different things, I learned how to look at a deal. Is this a good deal, or is this a bad deal? So if you have extra money that's just sitting in the bank, don't let yourself lose money to inflation. Invest it either passively or do something that involves yourself, boots on the ground. Buy a single family rental.
Right.
Do something. Definitely beneficial.
Okay. Well, very wise words. And thank you for coming on the show. It was very informative, and I enjoyed our conversation. And hopefully we could have you again sometime.
Absolutely. Thank you so much, David, for the tremendous opportunity, and looking forward to collaborate in the future.
Yeah, for sure. All right. Have a good day.
You too.